Today, Bitcoin and Ether react to the latest move from the Fed. Digital asset companies look to lenders in Switzerland after the collapse of Silvergate and Signature. And we hear from the attorney representing one of the Coinbase users taking their case to the U.S. Supreme Court. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Interest rates have been a huge focus for crypto markets in recent months, and it's especially true this afternoon. Bitcoin, Ether, and Solana all trading in reaction to the Fed's decision to hike interest rates yet again, even as concerns around the economy and the global banking system linger. Okay, let's talk about the top stories. First, digital asset firms are scrambling to find banks to work with after the demise of Signature and Silvergate. According to several industry insiders who spoke with CNBC, these companies have now turned to Swiss banks, flooding them with requests for banking services. Why Switzerland? The country's regulation is very welcoming to digital asset companies. The crypto industry has struggled to access banking services from traditional lenders who usually don't want to get involved with anything that doesn't have a clear regulatory framework. An insider told CNBC that requests for banking services from crypto firms have continued despite turmoil in the Swiss banking sector surrounding Credit Suisse. That bank was acquired by UBS in a regulator-brokered deal to stem contagion to other lenders. Next, customers are still redeeming Circle's USDC stablecoin at a greater pace than they're buying it, even after the issuer recouped deposits caught up in the fall of Silicon Valley Bank. On Monday, users redeemed nearly $740 million worth of USDC, while Circle issued less than $9 million of the token on the Ethereum blockchain. That's according to a Bloomberg report citing CryptoCompare. Since the beginning of this month, Circle reportedly burned more than $12 billion in USDC while issuing about half as much on Ethereum. After the shutdown of SVB, USDC depegged from the dollar and dropped as low as 85 cents. The now collapsed bank is where Circle kept more than $3 billion of its reserves, and USDC has since regained its peg, and Circle was able to move that money to new banking partners, yet users have continued to dump the token. We reached out to Circle, but haven't heard back yet. Finally, an Australian regulator wants banks to be open about their crypto involvement. The Australian Prudential Regulation Authority has started to ask banks to disclose their exposure to crypto-focused ventures following SVB's collapse. That's according to the Australian Financial Review. The regulator has reportedly told banks to improve their disclosures around crypto assets and give daily updates to the agency as it seeks to gain more insight into existing and potential vulnerabilities. We reached out to the Australian regulator but did not hear back right away. They did decline to comment for a Reuters report, but pointed to a statement from last week addressing plans by the agency to intensify supervision of the local banking industry and seek more information on any impact from the fall of SVB. All right, on to our main story. The Supreme Court just heard arguments in its first ever crypto case. Yesterday, lawyers for Coinbase tried to convince the justices to halt customer lawsuits against the crypto exchange. The firm has argued the claims belong in arbitration. One lawsuit is from Abraham Bielski, a user in California who sued Coinbase after he says a scammer stole more than $30,000 from his account in 2021. The lawsuit accused Coinbase of violating the Electronic Funds Transfer Act by not investigating or recrediting his account. Today, Crypto World's Mackenzie Sigalo spoke with the lawyer representing Bielski in front of the Supreme Court.
So, first crypto case to reach the Supreme Court. How did it go yesterday? And can you walk us through your client's argument that he's making?
Yeah, so in a lot of ways, the case is and is not really specific to crypto, right? The case is about arbitration and forced arbitration clauses and what happens when a financial institution or any other big organization tries to force a plaintiff to go to private arbitration instead of bringing their case in federal court as a class action. And so generally speaking, that's what the case is about. But with respect to my client, Mr. Bielski, he lost over $30,000 from a scammer on Coinbase. And like thousands of other people who had this happen to him, when he reached out to Coinbase and asked for help, they were of no assistance. They didn't respond. They didn't undertake a proper investigation. And we allege that this violates the Electronic Financial Transactions Act. We allege that it violates California state laws. And we said that this case should be in federal court and it should be a class action. Well, Coinbase said, well, we have this arbitration agreement. We don't want you to be in court. We want to go to arbitration. The district court judge held that the arbitration agreement was unconscionable and was not enforceable. And so we got ready to move forward with the case, and Coinbase moved to appeal the case. They tried to bring it up for appeal to the Ninth Circuit, which they did, and it's now on appeal. The issue before the Supreme Court is whether, while the case is pending on appeal, whether there should always be an automatic stay so that Mr. Bielski would not be allowed to proceed with his case in the district court while the appeal is running its course.
So lots of companies have arbitration clauses within their user agreements. So why is it that you're arguing that Coinbase's is different?
Yeah, so Coinbase had this really onerous provision that basically said before a customer could even bring an arbitration, that they had to exhaust these internal procedures. They had to file an application with Coinbase. They had to wait a certain amount of time for Coinbase to do an investigation. They had to wait for Coinbase to get back to them with the results of the investigation, and so on and so forth. Well, my client tried to do that, and they didn't respond to any of that. I mean, it was just, it was radio silence in response to his efforts. And on the other side of the ledger, Coinbase doesn't have to do anything. If they want to bring any customer into arbitration or sue them into court, they can do so. So what the judge found was that it was this one-sided nature of the agreement that made it unconscionable and unenforceable.
Now, Supreme Court decisions in recent years have largely favored corporations and these kinds of arbitration agreements. How optimistic are you that the court will rule in your favor here?
Yeah, that was sort of what I thought as well. But the more I dug into this and the more I started preparing for our brief and for the argument, I think it's a little bit more nuanced than that. There have been several very good decisions. Most recently, the Morgan versus Sundance case. There was a Viking Rivers case. So there have been a number of good cases where the justices are really getting down to looking at the actual language in the arbitration agreements, looking at the language in the statute, and really calling balls and strikes. And I think that there may be some tendency among the members of the Chamber of Commerce to try and put their thumbs on the scales in favor of big corporations. But I think even the more conservative justices are doing a good job of looking at the rule of law, and as Justice Roberts infamously said once, calling balls and strikes. And I've seen that. It doesn't always happen, but I am hopeful that will happen here. And if it does, I think we'll win.
Walk us through a few of the potential outcomes. What does it mean if they rule in Coinbase's favor? What does that look like for customers? What does that look like for the company versus a ruling in your favor?
That's really a great question, and why I think this is so important for customers. So on the one side, if they rule in our favor, what it means is when a customer wins an arbitration and the judge says that the arbitration agreement is unenforceable, right? The defendant still has an automatic right to appeal, and the defendant can still ask the court to stay the case, to put things on ice while the appeal is being heard. And the judge can still do that. So these businesses still maintain their right to do that. And we say that's okay. That's as it should be. That there may be some instances where it makes sense for cases to be stayed. But if Coinbase gets its way, even in the instance of a case where the arbitration clause is clearly unenforceable, I mean, you have people who try to invoke arbitration clauses that they're not even a party to, right? Or that relate to a different transaction. That was what happened in the Bielski case, which was also against Coinbase. It was this Dogecoin sweepstakes case. And there were two agreements. One agreement had an arbitration clause and had nothing to do with the lawsuit. And another agreement was what the basis of the lawsuit was about, didn't have an arbitration clause. And so there, it just made no sense whatsoever to stay the case. But if we lose, there will be an automatic stay every time a court finds that there's no arbitration. So even if so basically what happens is the consumers win, a judge finds that there's no enforceable arbitration, but then nothing happens. Then they have to wait another year to 2 years for a court of appeals to decide a mandatory appeal. So as I argued yesterday, all that they're really getting out of this is delay. And for defendants, that's good. Delay is always good for defendants because things change. People lose interest. People forget what happens. The facts change on the ground. And, we're talking about cryptocurrency. One of the things that I said yesterday in the argument is obviously this is a sector that's getting hammered. A lot of the big players in this space have gone out of business, and the ground beneath Coinbase's feet is trembling right now. Who knows what's going to happen in a year or 2 years? And if our case is stayed, that could have a serious negative consequence to people like Mr. Bielski and the thousands of other people who were deprived of their money because of scammers.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.